Hello, everybody. Welcome to the Trading with Ashley show. It has been a busy weekend for me trying to get out a lot of content for all of you. I hope it's been helpful. I wanted to tell you a few things that are pretty special. So, one, I wanted to celebrate one of my members, Neutron. He started with me a year ago. He just had his year anniversary, and he has enjoyed 144% gains since he learned how to properly trade. He has learned a variety of different trading styles. And the best part about this, he has done this while he has been working full time. So imagine what he will be able to do when he decides to actually retire. He is well on his way to his $1,000,000 goal, and I cannot wait to celebrate him getting there. The other thing I wanted to share with all of you is we have just completed our new Trader Network Credit Spread Challenge, and it was incredibly successful. And now I am pivoting back to the inner circle, and we are starting a $50,000 retirement challenge. So the exciting part about this is I am going to combine a variety of trading styles for us to try to get to our goal. Let me give you a real quick rundown of all the different challenges that we've done and how successful they have been. We do a great job of tracking all of the challenge results because a lot of people like to join the community for the challenges, and I want to make sure they can see their return on investment. So we started off with the $25,000 challenge, and that one was wildly successful. We were primarily doing wheel strategy trades. However, if we had extra money of the $25,000 that we were working with, then I would do a few credit spreads to add that kicker to our returns. So in a matter of just a short time, we were at this about a month and a half, we created $5,431 in profit. When you annualize that, that was 156% annualized return. So that one was very successful. Then we moved on to the $30,000 buy right challenge. Now we used a lot of our earnings from the $25,000 challenge to actually do this challenge. We ended up at the end of the 6-week period with $5,498. That was 158% annualized return. Now the beauty of this is we started with $30,000, but because we were able to reuse that money throughout the challenge, if you're doing buy rights, it's a quick in and out. We were able to produce so much more money because we use the same $30,000 primarily and all of our compounded winnings to actually put on new trades. So it worked incredibly well. Then I switched gears and I focused on my small account in the new Trader Network, and we did a credit spread challenge. Now we produced in 6 weeks over $1,000 profit, which was a 42% annualized return when you look at the amount of money that it took to produce that $1,089. But what made this challenge so wonderful is this is the result of 10 trades. That's all we did, 10 trades open and closed. Now we still have 2 trades that have yet to mature. I will close those out in profits. It'll even add to this. But I had to go ahead and stop the challenge so that we could move on to the one that I'm about to help all of you with. But this shows you the power of just having a concentrated effort and having a goal to produce enough money so that you can start to see how this works. So let's move to the next challenge. Now I am going to be combining a variety of trading styles to accomplish this. Now we're working with a little bit more money. This is a $50,000 retirement challenge. And the reason it's a retirement challenge is I want potential retirees to know there are so many ways that you can actually produce income. Now, we will be spending the vast majority of our effort, energy, and money in our accounts on selling puts. That's the primary strategy I use when I am producing income. But we do have the advantage of doing some buy rights. Now, I like to do buy rights usually on a Wednesday with a Friday expiration because the goal of a buy right is a really quick win, and that helps ensure that that positive momentum is continuing on a bullish stock. Then we are going to use some credit spreads. We usually have remnants of money that I can then take at the end of the week and put on credit spreads. Sometimes those credit spreads may expire in a couple of weeks. Sometimes they'll go a little bit further out. I usually try to balance risk to reward when I'm doing credit spreads. But then we are going to also add something that will really help smaller accounts. We're going to add skips to the mix. Now, most of you know from watching my videos that I came up with the terminology of skips. It is an option, a call option that you purchase anywhere from about 3 to 9 months out. Now, we won't be in the challenge for that long, but we will take profit on these if a stock is at a critical point for it to continue to push forward. And we'll use all of these in tandem based on what the market is giving us. So if you're part of this challenge, what you're going to learn is how to use each of these powerful trading styles based on what the market is giving you at any given time. Now, although it is a $50,000 retirement challenge, we are going to be holding to the $50,000 level so that you can see how you can scale this account. But if you don't have $50,000, you could still participate based on the trades that work with your risk reward tolerance. So if you have a smaller account, the credit spreads and the skips, they should do really well for you. When we're doing the buy rights, you would need the equity to buy 100 shares, but you might be interested in some of the tickers that are a little bit lower priced. When we're selling puts, same dynamic, you might be more interested in the tickers that are lower priced. But there should be something for everyone, and the main thing with these challenges is you start to learn all these different nuances because you have real money at play. So I'm looking forward to it. I can't wait to see what we can accomplish together, and I would love for you to be a part of it. I am kicking off the challenge on Monday, October the 27th, and here's why. It's very strategic in nature. Look at all the potential big tech earnings that we have coming up. And when I trade earnings, I try to do it very conservatively, very safely, but I do take advantage of the higher volatility, which offers me more premium on quality companies. So we have all these potential trades that we will be taking. First, you see Tesla here this week. So this will be for those members that are in the community now. But then if you join, you'll have an opportunity to trade all of these Mag 7 stocks with us. Google, Microsoft, Meta, Apple, Amazon, AMD, NVIDIA, Avgo, Oracle. There's quite a bit there, and I will do everything in my power to ensure we get the most possible premium out of these trades in the safest way possible. Now, for this new challenge, I want to make sure that all of you are subscribed. I have something to announce this week that is going to help you with the new challenge, and I want to make sure you do not miss that very special announcement. So be sure that you are subscribed to my channel, and I will share with you this week what I'm going to do for those of you that want to join, how I'm going to try to help you. All right, let's talk about the crazy week ahead. So the good news is I see that the U.S. and China are trying to work out their differences and de-escalate all of the tariff talk, and that would be very good for the markets, especially since we have a lot of Mag 7 earnings coming up. Now, my trade that I am going to share with you this week has to do with Tesla. Now, for those of you in my community, we are going to trade Tesla a variety of ways to take full advantage of this higher volatility. For those of you that are not yet in my community, I'm still going to help you. I'm going to jump into the computer. I am going to share with you some potential trades for Tesla and what the expected move is. This will help you make smarter decisions. Let's go do that now. Now, let's take a look at the overall indices. You know, I love focusing on the Qs because that's a lot of the stocks that we trade. So if you look at it, it looks like we are sideways bound for right now. Now, obviously, anything could happen. I hope you all realize that technical analysis only works when things are copacetic. When you have tweets that come out or you have geopolitical world events, it can skew everything one way or the other. But looking at the markets overall, right now, we're at 55 on the RSI, so we're still in a bullish mode. This is the 3-month chart, and we're right there in the middle of that 20-day moving average. So it could go either way for sure. So will it use the 20-day moving average as support and go higher, or will it be rejected at the 20-day moving average and are we headed down to the 50-day moving average? Of course, we've got cash to the side, so I would welcome moving down right here to around that 585, 587 mark if we get downward pressure, because I will load up on even more skips and leaps on the Qs if we get here. So we'll have to see what happens this week. I am anticipating that the market will be anticipating good returns from all the big tech in the following weeks, so it may start pulling up on all that potential excitement. For our play this week, I am going to be doing several plays with Tesla within the community. So if you're within the community, we are going to have a variety of trades that I look at to help all of you that want to get into this particular ticker symbol. It does offer quite a bit of premium, and you can usually choose some pretty safe levels to trade it at. Tesla has earnings on Thursday after the close, so we have all week to work a variety of different trading styles that I want to work in. And it is is right now in a bullish mode. We're 56 on the RSI, so it's forging ahead. It's been trading sideways really since about 9:15 when we gapped up right here. And so you can see it's going all the way from 9:15 all the way to where we currently are. And it's just been sideways trending, which is wonderful with a stock like Tesla because you can get a lot of premium if it just goes predictably sideways. So it too, just like the Qs, it's kind of right there in the middle of the Bollinger Band. So we've got to see if we are going to push ahead after earnings. Now, there's just a couple of different ways you could play this. If you have shares of stock of Tesla, I am going to give you a potential covered call that you can shoot for based on what we're looking at. And then if you don't have the shares of Tesla, I'm going to give you a potential good entry that you might want to consider. So let's look at that now. So what we have right here with Tesla, you see right here this gap. It's a small gap, but it was a gap and it was right there at 395. That's the perfect spot for a pickup of Tesla because if we come down to 395, there's a big psychological barrier once a stock like Tesla gets under 400. I am of the assumption that it will be bought back up again based on everything that I'm seeing. So 395 might be a great pickup for those of you that feel like you don't have enough exposure to this ticker symbol. Let's go look at what the premium is paying right now at the 395 mark. Now, this is the option chain that expires on Friday, so we are looking at just 5 days away. Now, the expected move after Tesla earnings is about $30 either way. That's a very big range, but I want you to see something. Because it's earnings week, this is what I love so much about the volatility of earnings. Look right here. If we go with the 395 on a sold put, we are getting $337, so $3.37 per share, by putting up $39,500. But we get this in 1 week, which is a very good annualized return. And so either one of two things happen if we sell the 395 put expiring this week. Either we will quickly get the 337 because it will expire on Friday worthless, or if we do have bad earnings and it dips down, we might be able to pick this up at 395, which is great other than just going to buy 100 shares right now. And so the worst thing that could happen is if you assume the shares at 395 and then Tesla continues to drop and doesn't recover anytime soon, then you could be in a waiting game. So it's something you want to consider if you're selling options. I want you to keep yourself safe and make sure that one ticker is not controlling too much of your portfolio. So let's look at the opposite end. Let's look at the call side. Now, if we want to use expected move as the potential of a fair call away, then that puts us right here at 465. So if you have 100 shares of Tesla and you have nursed those shares up and you are okay letting them go, let's say they are in your trading account, not your buy and hold account, then in that case, you would be paid $800 for agreeing to give up your Tesla shares in profit. Now, if these are the only Tesla shares you have and you don't want to risk them being taken away, then I would resist selling covered calls at all. So let's look at how this would play out. Let's assume you got Tesla at around $400 and you have been able to see it rise. Now, if we have incredible earnings and Tesla decides to push up to this 465 level, you would have $65 in stock appreciation if you agree to sell it at 465. For that, you are going to receive $8 a share. So that's $800 just for agreeing to give up your Tesla shares in profit. Now, if Tesla does not end the day on Friday at 465, it's below that, then you keep the $800 and you keep your shares. So you can decide how to use this instrument of a covered call and how it best fits your trading profile. Now, what if you don't have the money to trade a stock like Tesla over earnings? Well, they do have the leveraged ETF, TSLL. So if you were interested in that ticker because it's much smaller price, let's look at where we might look at an entry. But before we do that, let's take a look at this 395 mark. On this delta, because this is the one we're doing for larger accounts, the delta is 0.139. So what we're going to do, we're going to go look at TSLL and we're going to look for a comparable delta. So if you decide to trade that ticker, you might want to try to shoot for this similar delta so that you know that if Tesla gets down to 395, then more than likely TSLL will get down to a similar delta. Let's go look at that specifically. Looking at the 1024 expiration date at TSLL, the 1650 is the one that is closest to the delta that we saw on Tesla. It's at 0.14, meaning that there's about a 14% chance that we end up at the 1650 level on the expiration date. If you want it to be a little bit more conservative, you might want to consider going down here to 0.11. That leaves you about an 11% chance, and that's right there at 16. But you're still getting great premium for either scenario. So if you went with the $16 strike, if you decide to go with the $16 strike price, you would need $1,600 to make this trade. If you decided to sell the $16 strike, you would be paid 24 cents a share, so $24 for agreeing to buy TSLL at this level. Now, if you do get assigned the shares of TSLL, it is a leveraged ETF, so I want to make sure that you're safe with it and you don't hold on to it too long. With these leveraged ETFs, they're great when a stock is in a bullish mode, but if a stock retreats, it goes down twice as fast too. So proceed with caution and have a trade plan so you know at what point you want to pull that exit hatch to get out of the trade completely if it's not going in your favor. I hope you found that helpful and now you are motivated and ready to trade this week. Remember, if you're with me, Trading with Ashley, there is no trader left behind. Now, if you want to watch some of the other content that I worked on for you this weekend, you can watch that right here.